Hi, it's a Wise Wednesday, and today I wanted to talk to you about cash alternatives. When we think about cash, a lot of times we think of just money that's sitting in the bank. And there's a place for money sitting in the bank, and I want us all to think in terms of 1 year or less, 1 to 3 years, and 3 to 5 years. So if you have money that you need in 1 year or less, the bank is probably the best place to go. When we think about bank products, we're thinking about checking accounts, any money you need on a monthly basis to pay your bills, a bank is the place to go. If you have an emergency fund, a bank is the place to go with those funds. If you have a known or planned purchase or expense within 1 year, a bank is probably the best place. But then I want to start thinking about cash alternatives. Sometimes people have money sitting in the bank that they don't need within 1 year. It's not for paying bills and it's not their emergency fund, but they think it's the only place to go to keep their money safe. I'm here to tell you today there are some great cash alternatives. So if somebody has money they don't need, let's say for 1 to 3 years, then probably what you can do is start looking at CDs. You can certainly look at CDs at the bank, but also you can look at certificates of deposit through a brokerage firm like ours. We can get CDs for 1 year, 18 months or longer for over 5% for that period of time. So instead of just leaving it sitting in the bank earning lower interest, you can get a higher interest rate if you're willing to lock that money up, let's say, for 1 to 3 years. Then you go 3 to 5 years. At 3 to 5 years, there are fixed annuities out there that pay even higher than CD rates for a longer period of time. So, for example, there are 3 year fixed annuity rates right now that are paying over 5.25% per year. And then there's also a 5 year fixed annuity paying more than 6% per year. That means you get 6% every year for the 5 years that you own this annuity. Every time you take a different approach, you give up some liquidity, some less access to those funds. So, but it's just important to know there are other places to go than just the bank when you need a cash alternative. Other thing to keep in mind is this could also be a bond alternative. Sometimes we use bonds in a portfolio. They haven't been great because interest rates have been rising. They're volatile. You can eliminate the volatility, eliminate the fees in a lot of cases, and actually raise the rate of return by using, let's say, a CD or a fixed annuity as a bond alternative. So today, the idea is to think about money that you want to keep safe, that you want to have liquid and available, that you don't want to take a risk with, but it doesn't all have to mean the bank. There are cash alternatives, CDs, fixed annuities. They can also be called bond alternatives. See you next time.